Hi dear students, before we discussed about the types of meetings, and in that we discussed about the kinds along with quorum and the proxy. Now in the same regard, let us move on to the corporate governance. Normally this question was found in the previous papers for the short question, never in the essay, but however this is something very important to know along with the proxy and quorum. Now let us see what does a corporate governance mean. Normally these are certain rules that is followed by the corporate companies in order to avoid the accounting fraud. These days in most of the corporate companies we are observing that accounting frauds are happening on higher range. So in order to control this corporate governance system was introduced basically with certain kind of rules and restrictions which are executed and established by board of directors. So the term corporate governance has gained much importance when accounting fraud of high profile companies were observed in the business world, and that is the reason was mainly due to the lack of adequate governance mechanism. So now let us see what is the definition of corporate governance. If we want to define the term corporate governance, it would broadly refer to the rules, processes, or the laws that the corporate businesses has to be operated, regulated, and controlled. Normally, corporate governance is nothing but the standard rules, procedures, and the processes that a business has to execute, especially for the board of directors, shareholders, auditors, and stakeholders. And the second major in let us look at the governance in India. I mean the corporate governance in India. This initiative was first taken by the Confederation of Indian Industry. This is also called as CII. And secondly, it was initiated by SEBI, Stock Exchange Board of India. And the third initiative was taken by Naresh Chandra Committee and Narayan Murthy Committee. Now let us see about the corporate governance in the Companies Act 2013. So here I mentioned in the Word document like what are the areas that it has to cover according to the Companies Act of 2013. The first and the foremost, it is the role to be played by the independent director. So according to Act 2013, the listed companies, the public company, at least 1/3 of the total number of directors must be there, and public companies having a turnover of 100 crore rupees or more, at least 2 directors, and public companies having a paid up capital of 10 crores or more, at least should have 2 directors. So this is one of the rule or the law that is fixed by corporate governance under Companies Act. And coming to the women director, according to Section 149 Companies Act, all listed and non-listed companies with a paid up share capital of 100 crores must and should have a women director. And auditing committees also is one of the major important for doing the financial audits, because the most important the most important objective of the corporate governance is to control the accounting frauds. So audit committees are must and should for the companies, and the chairperson should be able to read and understand the financial statements. And the next one is composition of nomination and remuneration of the committees and stakeholder relationship. This is particularly according to Section 178 subsection 1, Section 178 of subsection 5. It mentions the duties of the committees shall be identify the person who are qualified to become the directors and who has to be nominated for the director positions. What are the remunerations to be paid to them? This is all mentioned in this 2 sections. Dear students, we already discussed about all these topics and the kinds of directors. However, in the corporate governance, we are just as a little we are learning what all are the important. So far we observed is about the women director, audit committees, independent director, which are mandatory for the corporate governance to function in corporate companies, and also about their remuneration and nomination of directors. And the next one is internal audit. As we know that Companies Act of 2013, it made mandatory that it has to go with the internal audits, especially when the paid up share capital is 50 crores or more and with a turnover of 200 crores or more in the preceding financial year. And it also considers the outstanding loans and borrowings from the banks or public financial institutions worth rupees 100 crores. So if any company takes the loans from the financial institutions above 100 crores, they also must and should go with the internal audit. And a very important one is fraud investigation office. If any of the auditing concerns are doing fraud in manipulating the financial statements or accounting books, then they are highly offense and punishable. According to Section 211 of Companies Act, it should establish an office called the Serious Fraud Investigation Office. According to Sarbanes-Oxley, which you remember I discussed in the class, so serious fraud investigation plays a very, very important role, because if anybody is not doing a due diligence or conducting any kind of manipulation with accounting systems, or not following the proper governance rules imbibed by the organization, they are strictly offensed by the law. And the next one is corporate social responsibility. This has become a very mandatory in the recent years, dear students, especially for the companies with the turnover of 500 crores or more, or the turnover of 1,000 crores or more with a net profit of 5 crores. It is must ensure that 2 to 3% of their revenues must be reserved for corporate social responsibility, according to Section 135 of One Companies Act 2013. So these all are some of the points that resembles and speaks about corporate governance, dear students. Please go through the Word document here for your understanding. Thank you.